What is a supply chain? Rather than giving a rigorous definition, I will focus on the purpose that a supply chain serves, which I believe is more useful. For every business to exist, there are at a minimum two things required: a supply of raw material and a demand for the finished product. A supply chain is basically a path that connects supply to demand for a product or service. For example, supply could be a farm that produces grain, while demand may be represented by food products like bread, biscuits, etc. Or supply may represent timber, while demand may be for furniture. In case of services like healthcare, the various supplies are that of trained doctors, nurses, equipment, and medicines to meet the demand generated by sick patients for health services. What this means is that all the processes involved in converting the raw material from the supplier into a finished product in the hands of the customer are part of the supply chain. But this is exactly the business of any organization producing a product or delivering a service. So, actually, the supply chain is the business of the organization. The purpose for me to define the supply chain in this manner is to develop the thinking of supply chain practitioners to view the supply chain as an end-to-end integrated system. Let us take a concrete example. Consider the supply chain for a candy manufacturing company. The raw materials, in this case, for example, sugar, are sourced from sugarcane farms and then passed through mills and a network of suppliers. These raw materials are then converted into candy in a factory through the processes of boiling, kneading, molding, cooling, wrapping, etc. After which, the candy is packed and distributed through land or sea or air to wholesalers and retailers and finally reaches to the customer. This is a simple enough example to study. I would like to elaborate it further. There are three main flows in the supply chain I would like to talk about. The first is the material flow. This is the actual movement of tangible items. For example, raw material, finished product, and all the resources like people and equipment that make this happen. Generally, the materials move from left to right, from the supplier to the customer. The second type of flow is the financial flow. To make the material flow possible, suitable financial input is required in terms of salaries to employees, investment in equipment, and this generally flows in the opposite direction as the material flow. Money generally flows from the customer to the retailer and so on to the supplier. The third type of flow is the information flow. Communication is extremely vital for the optimum functioning of the supply chain. This includes forecasts, tracking information, purchase orders, invoices, etc. Information flows both ways, from the supplier to the manufacturer in terms of order confirmations, and from the manufacturer to the supplier in terms of forecasts. There is one more thing that keeps this flow of product, finance, and information continuous, without disruptions. And that is relationships. Relationships ensure that the various supply chain partners understand their precise role and work together to realize the vision of the integrated supply chain. So this is what a supply chain is. An often asked query is that most of us are not in a role where we have the full visibility or control on the entire supply chain. For example, one may be a production manager in a factory, and they may not control the retailer or the customer directly. This is a very practical scenario. Well, if we really want to run a well-oiled supply chain, the production manager needs to understand the processes of their partner and develop relationships to reduce cost or improve service in coordination with the other supply chain partners. Please let me know your comments and share this video with your colleagues and friends.